Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I am your stock mentor, Brian Johnson, and we are coming into options expiration week. Now, last week we had, and you can see the big white bar up here, but as a quick recap, this was not actually a run up, it was just a gap up. From that point forward, we moved sideways for a couple days. A little bit of up on a Wednesday, a little bit of down on a Thursday, followed by more selling on Friday. But where did it get us? Well, really, guys, we're right back to this in between mode. We're not bearish, we're not bullish, we're just sitting here waiting for something else to happen. Now, we had opportunities on Friday to take some trades below 10,700 was my level to get short. Below that level didn't necessarily mean we were going to break any of these levels down here. If we can get below 10,300, it's another great place to get short if you're not already short. If you're holding over the weekend, you're brave because of what we saw last Monday. However, I really don't expect us to see another 50-point gap up. Could it happen? Yeah, anything can happen. But, this was kind of an anomaly. This big drop here was an anomaly. This here was an anomaly. You just don't see that very often in the markets. When it does happen, though, it brings it to the forefront of your mind and, of course, makes you a little bit more cautious about where you're going and what you're doing with your next trade. But just keep playing the charts. It's the best advice I can give you guys. Play the charts, not your bias. Once your bias comes in, you're really just kind of gambling at that point. Might as well sit down at a lottery machine and just pump quarters into it. Wait for these heavier levels of overhead resistance to be broken. We've got the 50, the 20, this blue line, all of this right up here. 10, really above 11,000 is still my bigger mark to get long if you want to hold maybe on an overnight type basis. Mondays into Tuesdays holding long seem to be okay. It's been very good to the markets the last few umpteen months where you could actually hold long overnight on a Monday into a Tuesday and either it would move sideways or up a little bit. We'll see if that same scenario plays out. So watch all these levels though. The break of 10,700 was my, like I said, area to get short, but we still have to watch now as it comes back up. Will it hold? Will it hold as an overhead resistance level? It's going to be working in conjunction with these moving averages. Keep those in mind as we come into early Monday morning. From a daily standpoint, see how we have, if you're an Elliottian, this is a very nice 1, 2, 3, potentially 4, 5. Maybe on the way down. Got to break these lower levels to prove it, though. Come back down into the 200 day moving average. We get below 10,200, guys. Wow, this thing could really start to take off. I'd really be watching that closely. Now it's another 400 points away. That's quite a distance, but right now we could see some consolidation. Don't be surprised if we just kind of bounce sideways here. For the first few days of the week as this thing consolidates. NDX on a 60-minute did the same thing. Look at the gaps we're leaving, though. A lot of these, eventually, they will need to be filled. They don't have to be filled, but most of them will at some point or another be filled. This here is coinciding with the 20 period moving average, so keep all of these overhead levels in mind. I still would like to see it get up and over 2,000. 2,000 was my area to get short. Above 2,000 would be a good area to get long on a bigger term hold for the Nasdaq. That's 100 points away. So if you're swing trade or wanting to swing trade this, I tell you to kind of sit back and wait and see if you could see if you get these breaks up here sometime whenever. I don't know if it'll ever happen, but I would just be intraday trading coming into the week. Same thing from the NDX daily. Notice how we're holding here at the 1900 level, but just chop. This is all up then down type action. It's just sideways motion. This is where you get your hands slapped. Lots of maybe some opportunities intraday, but until we can get below like maybe 1850 or above 2000, I don't think I'd be looking to hold for any extended period of time. This is one of the more interesting charts, and that is the weekly chart. Notice how this area here held this past week. We had a close below the 20-week moving average and then another close out of this channel. That's going to be the area for the NASDAQ, obviously, to get back in. You'll see that the top of this channel is right around G2000. Another good reason to wait until you break up over that area to get long the NASDAQ. Can happen, guys. I mean, we can see this thing retest these highs up here, maybe even push past it. It was very extended, but this move that we've had the last couple weeks is certainly, at least in the short term, kind of rectified some of the buying that we had for all these number of weeks, all the way up to the 2060 area. So holding below here, though, is good for the bears. That still makes it bigger term a bearish outlook. That is what we'll be watching. Doesn't mean we can't move up. I'm just saying longer term, I'm still bearish on these markets. SPX 60 minute doing the same thing. Sitting right here at this 1130 area. Anything below that maybe gives you an opportunity for a intraday shorting opportunity. Still support below us though. 1110 is still your best bet. 1110, 1105 is probably still your best bet to get short this market. And then above 1160, 1170, boy, I don't know, 1190 ultimately to get long in a buy and hold type of a situation. Because what we're seeing right now, based on the daily, same thing we're seeing in the other ones, just sideways movement. Very difficult to make money in these things. This is really where you want to be watching your individual stocks for movement until we get some sort of sense of direction within the markets themselves. These type of big moves make for good intraday trading opportunities, but not so good from a swing trader's perspective if you want to hold for a few days. Just really lots of hand slapping going on in there. Weekly showing us the same thing. Notice how we've closed below the 20-week moving average not once but twice on the SPX. Nasdaq's typically stronger. That's exactly what we're seeing out of the Nasdaq, but the SPX is now below the 20-week moving average for the second week in a row. That still leads me longer term bearish on these markets. Bigger moves get us back up and retest this blue line now that we've broken it. Very good potential that could happen, but um, we may not see that for another couple of weeks. So options expiration typically volatile in most cases. And what we're seeing here is sideways. Really difficult to pick a direction here and say, yep, we're going up, yep, we're going down. You can't do it. We've broken this major support here for two, and now we've held underneath of it for at least 2 weeks. You know that I like to see these things, or I don't like to see them, but it's not uncommon to see these things come back and retest the underside of these lines just to prove that they're going to hold. So that scenario is still on the table. The scenario that we break down and below this 1100 area, 1105 area, which I'm talking about to get short, that's a very plausible scenario. Because this action is sideways, you can't choose a direction here. You have to let the charts tell you which way to go. If you want to choose a direction, great. And if you're right, congratulations. But it's really guessing at this time. There's nothing in the charts telling me, yep, we're going up or yep, we're going down. I can build a strong case either direction. VIX on a daily, we saw lots of volatility out of this thing. Look at this chop action that we're seeing here again. We saw it back here before we finally blasted upwards. We're seeing it here again. Which direction will it take? Really depends on where the markets decide to go. The markets start to fall again, we're going to see this VIX spike up again because of the fear coming back into the markets. Now, we are pretty elevated up here at this time. So any major move to the upside, any good news that might happen to stir investors into coming back in and buying, it's going to drop this VIX quick. I think we could either end up back here towards the top by the end of the week or even way back down here towards the bottom or below by the end of this week because of the volatility that is usually accompanied by an options expiration week. Apple on a 60 minute.